a $5 stock, in the middle of the biggest AI boom in history. While everyone is chasing trillion-dollar tech giants, some investors believe the real opportunity might be hiding somewhere much smaller. And here's the strange part. Wall Street analysts rarely talk about these kinds of companies. Not because they don't exist, but because by the time everyone is talking about them, the biggest gains may already be gone. So today we're going to break down something most investors completely miss. Because the next big AI opportunity might not be the company building the AI. It might be the company quietly powering it. And that's where this $5 stock theory starts to get interesting. Context: the global AI race. Right now the world is experiencing the fastest technological transformation in decades. Artificial intelligence is changing everything. Banks are using it to detect fraud. Hospitals are using it to diagnose diseases. Companies are using it to automate entire departments. Governments are even using AI to strengthen national security. But behind this rapid innovation is something much bigger. A global technology race. The United States is pushing forward through private tech giants and research labs. China is investing billions into AI infrastructure and domestic semiconductor production. Europe is trying to regulate AI while also remaining competitive. And countries like South Korea, Japan, and India are accelerating their own AI development strategies. This isn't just a technology trend. It's an economic arms race. And the stakes are enormous. Because whichever countries dominate artificial intelligence will likely dominate the global economy over the next 20 years. But here's what most investors don't realize. The companies dominating headlines are only one piece of the story. The real engine behind AI is something much less visible. Infrastructure. The hidden side of the AI revolution. When people think about artificial intelligence, they imagine software, chatbots, smart assistants, autonomous systems. But those tools require enormous computing power. Training a modern AI model requires thousands of advanced GPUs running simultaneously. Those GPUs sit inside massive data centers. Those data centers require sophisticated networking systems, specialized cooling equipment, and enormous energy supplies. In fact, some AI data centers consume as much electricity as a small city. Which means building AI infrastructure has become one of the most important industries in the world. And this is where things start getting interesting. Because the companies building this infrastructure aren't always the biggest names in technology. Some of them are surprisingly small. And occasionally, one of those companies becomes incredibly valuable almost overnight. A lesson from history. To understand why this matters, we need to look at the past. Back in the early 2000s, when the internet was expanding globally, most investors focused on the obvious companies. Websites, search engines, online retailers. But behind the scenes another group of companies was quietly growing. Companies that built networking equipment. Companies that manufactured fiber optic components. Companies that powered the backbone of the internet. And when internet traffic exploded, those companies suddenly became critical infrastructure. Their revenues surged. And their stock prices followed. Many investors completely missed these opportunities because they were too focused on the companies consumers interacted with. Today the AI revolution may be repeating this exact pattern. The Nvidia moment. A perfect example is Nvidia. Today Nvidia is one of the most valuable companies on Earth. Its chips power the majority of advanced AI systems. But years ago, very few investors expected Nvidia to dominate artificial intelligence. At the time, Nvidia was mostly known for gaming graphics cards. But researchers discovered something fascinating. Nvidia GPUs were extremely effective for training machine learning models. Suddenly demand exploded. Tech companies started buying thousands of GPUs. AI labs began building massive computing clusters. And Nvidia found itself at the center of a trillion-dollar industry. Investors who recognized this shift early saw incredible gains. Now the obvious question is this. Could something similar happen again? The hidden financial angle. Here's what nobody is telling you. Artificial intelligence is creating an entirely new supply chain. Every AI system depends on multiple layers of technology. Semiconductor manufacturing, data center hardware, networking infrastructure, cooling systems, energy management, software optimization. Each layer contains dozens of companies competing for market share. And when a technological revolution accelerates, capital floods into every part of that ecosystem. Right now, major tech companies are planning hundreds of billions of dollars in AI infrastructure spending. Cloud providers are racing to build new AI data centers. Governments are subsidizing domestic semiconductor industries. And venture capital is pouring into AI startups. That kind of investment creates massive ripple effects. Not just for big tech companies, but for smaller suppliers as well. The $5 stock theory. Now imagine this scenario. A relatively small company develops a technology that solves a major AI bottleneck. Maybe it improves networking speeds between GPUs. Maybe it reduces the power consumption of AI servers. Maybe it increases the efficiency of data center cooling systems. Suddenly, major tech companies start paying attention. Partnerships begin forming. Orders begin increasing. And institutions quietly begin accumulating shares. At first, the market barely notices. But as revenue growth accelerates, investors begin connecting the dots. And the stock starts climbing. This pattern has happened many times in technology history. Small companies suddenly becoming essential to a massive industry. And when that happens, the upside can be enormous. Why Wall Street sometimes misses these companies. Now here's something fascinating. Large institutional investors often focus on companies with massive market caps. Because they need liquidity. They need stability. And they need to deploy billions of dollars efficiently. Smaller companies don't always fit those criteria. Which means many institutions initially ignore them. But smaller hedge funds and venture investors often watch these companies closely. Because they're searching for the next breakout opportunity. And sometimes, those opportunities are hiding in plain sight. The bigger AI infrastructure story. Here's the part that makes this even more interesting. The AI revolution is still in its early stages. Right now, companies are racing to build the infrastructure necessary to support it. Massive data centers. Advanced semiconductor fabrication plants. High-speed networking systems. Energy-efficient cooling technologies. Each one of these industries is expected to grow dramatically over the next decade. Which means the companies supporting this ecosystem could experience massive demand growth. But the real story might be even bigger than that. Because one specific factor could reshape the entire AI industry. Energy. The AI energy problem. Artificial intelligence consumes enormous amounts of electricity. Training advanced models requires massive computing clusters. Running those systems continuously requires huge energy supplies. Some analysts believe AI could dramatically increase global electricity demand over the next decade. That means the future of AI may depend heavily on energy infrastructure. Power grids. Renewable energy systems. Advanced cooling technologies. Energy optimization software. Companies solving these problems could become extremely valuable. Because without energy, AI simply cannot scale. The opportunity for investors. So what should investors actually watch for? Instead of chasing hype, experienced investors often focus on a few key signals. First, is the company part of the AI supply chain? Second, does it provide technology that solves a real industry bottleneck? Third, are large tech companies forming partnerships with it? Fourth, is revenue growing alongside AI adoption? These signals can reveal whether a company is benefiting from the AI boom. Because the difference between speculation and opportunity often comes down to fundamentals. Warning/risk. But there's something extremely important to understand. Not every small AI company will succeed. In fact, many will fail. Some businesses are simply riding the AI hype wave. Others lack real technological advantages. And some may never scale their products. This is exactly what happened during the dot-com bubble. Thousands of companies claimed to be part of the internet revolution. But only a handful became dominant players. That's why serious investors focus on fundamentals. Real technology. Real customers. Real revenue. Because hype can drive short-term excitement. But fundamentals determine long-term success. The big picture. The artificial intelligence revolution is reshaping the global economy. Governments are investing billions. Corporations are building massive infrastructure. And investors around the world are trying to position themselves for the next decade. Some will focus on the megacap giants already dominating headlines. Others will search for the smaller companies quietly powering the system behind the scenes. Both strategies can work. But historically, the biggest percentage gains often come from companies that start small and then become essential to a massive trend. And right now, the AI revolution may be creating exactly those kinds of opportunities. Conclusion. A $5 AI stock might sound unbelievable. But history shows that today's tech giants often started as overlooked companies. Hidden in the background. Ignored by most investors. Until suddenly, their technology became impossible to ignore. The artificial intelligence boom is still in its early stages. The infrastructure is still being built. The supply chains are still expanding. And somewhere inside that ecosystem, the next breakout company could already be taking shape. But the real question isn't simply which stock is cheap. The real question is which companies are actually powering the future of artificial intelligence. Because the businesses building the backbone of the AI economy could become some of the most important companies of the next decade. And the investors who recognize those shifts early are often the ones who benefit the most. If you want to stay ahead of global money moves, subscribe to the channel.